every investor needs a trading dashboard which helps them highlight which markets and sectors to avoid and which ones to focus their attention on. And I'd like to share my dashboard with you. So I pull in tickers for either indices or representative ETFs. I then pull up a sparkline chart and the price growth over that time frame. The last trade is time-stamped because some trades are yesterday depending on the timing of the market. I've got a 5-year compound annual growth rate in there, so I can see which ones have good long-term growth. Various price changes around the day, 52-week high and the date of that high, date of the low and what the low is as well, 50-day simple moving average and the price relative to that simple moving average, and that way I can check whether something is overbought or oversold. And there's a website called TradingView, and that gives a verdict on various markets, and I just pull in that data, but I don't put too much emphasis on it. I also look at bond markets, generally inflation protected. That one seems to do pretty well because as inflation expectations increase, then the payout of that bond will increase as well. And it's all very similar sorts of data for the bond funds. I then also look at S&P 500 sectors. These have pretty good ETFs that track them, and that's why I focus on S&P 500 sectors rather than any other ones. And again, we've got similar data as well as the TradingView positions here. So as we can see, yesterday in the US was a pretty bad day across the board with only energy showing any growth. Commodities, so various metals, and then this one is a commodity basket that's got some other, I think, agricultural products potentially in there as well. So again, I'm looking to see whether some ones are potentially a bit overbought, which potentially copper is here. I've got the spark lines as well. Then I look across the different factors. So I'm looking here in terms of CAGR in particular. So the average CAGR is about 10%, but we've got some factors that have done better than that, specifically quality, momentum, and small cap. But with momentum, in choppy markets, it won't do quite so well. It works better when there's a definite long-term uptrend, which historically there has been, but I'm not sure whether that will continue. Then also I've got some themes, so just some thematic ETFs, where again I just put the ticker in and pull the data. I mean, a lot of these really come off the boil. They're quite heavily correlated, actually, as you can see, because they're generally looking at growth and technology, and particularly for the cloud computing, some of the constituents are loss-making. So yeah, not such a good picture there. Also pull in some data on some inverse ETFs. These ones aren't very good for a long-term hold, but it's just interesting to see what's going on there. I pull in daily charts, so I can select all sorts of indices here. I can look at how well it's doing versus a regression line, where it is relative to a 20-day high, 20-day low. This is all on the Nasdaq. How it's doing relative to the exponential moving averages. So here we've got a cross, so that's a bearish sign. I can also pull in average true range, and there it's increasing, so getting slightly more volatile. Here I can look at relative strength. I can just compare two different ETFs. Here I'm comparing copper against worldwide equities, and initially copper underperforms and then it absolutely shoots ahead from about mid-April. It's quite useful to look at this sort of relative strength because it helps to smooth out some of the moves in the market, and you can get a bit of a clearer picture of what's going on. We also look at 52-week highs. Here I've just pulled in data from a website using import HTML, and then that's got me the data that I need. And then I've got my raw data at the back, and then I've also got a watch list here. So this is just some random things I put together, but it's like US technology companies, some loss-making, some profitable, and it's very negative right across the board. So this is really telling me stay away from technology for a while, because this is much more ingrained across the sector as a whole. There's a big movement out of technology. But I can put in any tickers here and it'll just pull across the data for me. Then I've got a summary tab. So this says for 180 days, Russell 2000, so that's US small cap, that's the best market. Next is DAX, China large cap is the worst. In terms of factors, look at value, then small cap, worst is minimum volatility. In terms of sectors, we've got them here. In terms of themes, we've got them bonds again, commodities again. Then I'm saying that I've got my overbought criteria. At the moment it's set quite tight at 5% above a 50-day simple moving average. So if it's too extended from a moving average, then it could possibly have a pullback and you're possibly a bit late into this momentum party. So just be careful if you're buying that. And then the powerful thing about this is that I can just change the days and it will reload all the data from me across all the different tabs. And now I've got my old favorites of Nasdaq and Momentum and technology. I remember the good old days, but clearly things have changed. And then I can drop it down a bit more, get more of a short-term feel of what's going on. And there I've got DAX and value and energy. And then in terms of themes, only private equity has a positive return. So that's why this one is blank. So I think it's a really useful dashboard that I can use to focus my attention and get a good idea of what's going on price-wise across all sorts of different markets. If you like the video, give it a thumbs up, subscribe to the channel and ring the bell, and then you'll get notified when I load new videos. And if you've got any comments, I'd really appreciate them in the comments boxes below. Thanks.